everyone. Welcome to the next podcast episode. Thank you very much, Jake. Came all the way in from out of state. Like, this is a serious guy. You know,
Real out of state.
It took time to arrange this. I mean, we both have, thank God, busy schedules. It's a good thing.
Not complaining about it.
Exactly. I was just telling, who was it today? He's like, I can't catch you. And I'm like, thank God you can't catch me. If I had twiddling my thumbs and you could catch me every second of the day, it would be
Probably
a problem.
Wouldn't want to catch you either.
Yeah, exactly. So thank you so much for making it out. Give us a little bit of an intro about yourself is usually how we start off. Tell me a little bit who you are. Obviously, I know who you are, but let's give the crowd a little bit who you are in general, how you got to where you are, and then we'll really take it from there.
Okay. First of all, thanks for having me. I appreciate the fact that we were persistent about this.
Oh, yeah.
That we're actually here. My name is Jake Gluck, which you know. I own a debt brokerage called Fortune Capital Group. Fortune Capital Glück is Glück, like good luck. I had to come up with a name. So
That's catchy. That's
Fortune.
good.
Yeah. I'm in debt for about 13 years. I started out at a company called Eastern Union Funding with Iris Lotowitz.
Oh, you started at Eastern?
I did start at
With
Eastern.
The New York office?
The Jersey office. I was in Cuddle
nice.
in Lakewood, and I needed a job. And a friend of mine was like, I'm working here, come do this. And I didn't know anything about real estate. I have no family in any form of business anywhere. But he was like, come, people are doing business. So I sat down with Ira. He gave me my first job at Eastern Union was in the banking division. And I ran the all banking relationships, all new banking relationships, all existing banking relationships. And I would just go, it was literally at a Cuddle. I had no idea.
Like, how do you do that, by the way, if you don't know any financial terms? You're like trying to create a relationship with a bank, and they're like, what's the spread? What's the overnight rate? And you're probably like,
it was so much fun, honestly. Like, I'm the type of guy that, like, you buy a board game,
yeah,
and it comes with instructions. I don't read the instructions. Like, I just try to figure it out because I like figuring things out. I'm not good with building things, but like in general in life, I like figuring things. Anybody that knows me knows that you could explain something to me, but until I actually experience it or see it, I just won't understand it. So it was actually the best. I'm very grateful to Ira for this because it was the best experience I possibly could have gotten. Because I would sit in meetings with like the senior executive loan officer, and he would be telling me things, and I'm like jotting down like LTV. What does that mean? Like literally the basics. But I winged it. I'm very good at winging it. I was able to figure out like what to say to them so they didn't necessarily know. And like in a very, very short period of time, probably within 6 months, I had like a very good hold on, handle on what was what. I didn't understand the intricacies of a lot of the business, but I think that probably the reason why I'm still in the industry is because I started out doing that. So I really got a very, very good handle of which banks are doing what, how to learn what banks are doing. So now, we'll get into it more later on, but now in the market, like every day there's a new bank that wants to come back into the market. And, we could pick up very quickly on what they want. So I'll know within 30 seconds of a conversation what type of deals go to this guy, what type of deals we want to trust him with. So it was a great experience. I really, really appreciated that.
A lot of good debt brokers that I work with came out of Eastern Union and started their own shop.
Yeah, he did an amazing job training people. Amazing. My brother's actually started working for me, and he's reading The Ira Way. You could find it online.
Oh, wow.
I told him to go read it.
There is one shop.
For his book.
Yeah. The Ira's great. Ira's also from originally Eastern Union?
Ira's a lot of its own Eastern Union, yeah.
I didn't...
Originally, before he started G-Parenting.
Really?
Yeah.
See, I just know Ira from G-Parenting. I didn't even know that. Okay, see, I need to brush up on my...
Ira's,
yeah, that's so funny. So that makes a lot more sense now.
Yeah.
Like his,
So I really, the way that I ended up getting into the Baltimore market is that I was speaking to a friend of mine who worked for a company down here that was like starting to build their portfolio. Now they're huge. But he was telling me about certain terms he was getting from a bank. I remember it was on a Friday morning, and I was like, you know what, I'm just going to call this guy. It's Friday, I'm going to call him anyways. And he was telling me about certain terms they were getting from a bank, and I was like, you can go to Freddie Mac and get much better terms on this deal. And they were like, we haven't done any agency business. So this was probably like 10 years ago.
Lack of education? Like what?
Agency, I know it sounds crazy, but people really weren't doing a ton of agency business back then. It was like a Freddie SBL loan. It was like a $4 or $5 million loan. But they were also so used to their local banks that they weren't big enough necessarily at that point to go agency. Like they were just on the cusp of it.
In their mind, right.
So I did that deal, and then I ended up doing a lot of business down here for a while. Like I was doing a lot of agency stuff, and then obviously the agency business kind of slowed down a little bit over the past few years. But that's how we got into the Baltimore market, particularly. As far as just, after I was at Eastern Union, I went out on my own for a little bit, and then I started Fortune Capital about 5 years ago, right during COVID, which was obviously the worst time to start because I didn't really have.
Right.
If you had clients during COVID, it was great, but I was just starting out on that end, like on my own.
Right.
So I spent a lot of time learning underwriting. I actually was looking at buying some deals. I ended up buying something, which was really good for my education on the brokerage side because now I actually really understand real estate, which I think was a huge game changer for me. And then
on that point, I can't agree with you more. But like earlier, you met some of our partners here, and I think also like our brokerage. I think one of the reasons that we stand out is because we're coming from an ownership standpoint. So a lot of the challenges that I talk to people about on properties when they're buying or when they're selling, it's because like I started as a manager for the group that we are with, and then we started the brokerage from there. So like if someone's going to tell me it's going to take this long to get a tenant in Baltimore, I'm going to tell them it doesn't. Like that's just not how it works, right? And even though, we're not focused, I personally am not focused on ownership, not anymore at least, because I'm so focused on my business, because of the ownership, I know who to call to find out the real information on things and really give someone the right information. And kind of like what you're saying, if someone comes to you with a T12 that just looks like it fell from Mars because you run a property, you know what it actually takes to get to those numbers.
Right. I think that's really cool that you guys, I know a lot of brokers, and what stands out from the guys that are really productive are the ones that could actually be straight with their clients that are buying. It's hard to buy from somebody. It's hard to, because the numbers are all over the place and everybody's trying to twist your arm and get you to buy something for more expensive.
But at the end of the day, if this was a homeowner business, right, individuals, then yeah, they just try to whatever. Every buyer, they're not. When's the next time they're going to see them in 20 years? This is a relationship game, both on the lending side and on the broker side, right? Like debt brokerage and just regular multifamily brokerage. What are you going to do? You're going to sell the guy a lemon? What do you think is going to happen? He's never going to want to talk to you again. That's putting aside everything else of the reasons why you shouldn't just be an a-hole.
Right.
But like at the end of the day, people want to work with people that are honest. They want to work with people they could trust. And so, therefore, I try to make sure that I work with people. Obviously, working in the interest of my client, right? But I won't lie to people at the same time, right?
Right.
I'm not going to say to someone, hey, I have another offer on the table at X, if I don't. If I do, then I will definitely use it. But those type of games that I think in the lending side, I'm sure you've seen, and now are having a huge effect on the debt market of private, I'm not going to say private banks, like processors more. We'll get to that. But like to your point, yes, I find it very important to be upfront with people with representing my client's interest.
Right. It's actually, it's very challenging to do that in this industry. Like it's really hard to take an outlook of, okay, this deal might not happen, but in the long run, I'm going to build a relationship. But it's really the only way to sustain this. Like, I keep telling my guys, I'm like, this is the hardest market you'll ever be in, possibly ever. I don't know. I mean, 2008, I wasn't around in 2008. I joined after, but I keep saying, like, we have to focus on building relationships. Be straight with everybody that you talk to, because if you're going to try to throw something or shove something down their throat and you're going to retrade them, they're just going to go to the next guy. Like,
correct.
And nobody trusts anybody anymore just because there was always so much loyalty, but then so many brokers are out of the, mortgage brokers at least are out of the business. I would imagine a lot of sales brokers also. And B, there's just, nobody knows, like, yeah, if you're an agency client, you're going to the agencies. But other than that, there's always a new lender in the market. There's always somebody that's like more aggressive than the last guy was, because that's just this market. And it's
correct. Yeah, and to your point, I had a deal. I reviewed the HUD, and the owner reviewed the HUD, and he was about to sign it. It was going to close, and I noticed something that was off on the HUD. Now, he was okay signing it, and it was beneficial to the buyer. I'm representing the seller. At that moment, I made the split decision to tell this. It didn't affect my commission or anything like that. So I told the owner, look at this line. I know you reviewed it, but like pay attention to that. He didn't sign it. The deal almost fell apart. It took like 2 weeks to a month till we actually closed.
Wow.
But whose interest am I representing here?
Right.
Right?
That's a game changer.
It is. And you know what? I do a lot of business with that owner now. And I didn't do it because I thought I'm going to get more business. I did it because I'm not going to have this owner that I'm representing sign something when he didn't realize that all of a sudden the buyer just changed things with title without letting us know.
Right.
And it is what it is. Thank God we closed it. So yeah, I got paid anyway.
Right.
But I didn't know that in the moment. And I think that is, like you said, what stands people out. And I know on the brokerage side of things, but I am interested to hear there's a lot that's been going on with agency and private banks. If everyone looks at the month-to-month delinquency on CMBS has gone up, I believe, 6.9%? And that's the highest in 9 years or something. So what's your perspective on where has processors gone wrong? What is agencies' outlook going forward on taking on new debt? What's private banks' outlook on taking on new debt?
So I think that the market is so broad right now. Like I've been doing this for 13 years. There was a period where you brought a deal in and you knew exactly where the deal was going to go. Like you're like, this is the bank for it, and that's it. Now, for a million and one reasons, it's impossible to do that. Almost every deal has a story, especially if it's a purchase.
Yeah.
But refinances also, there's so many deals that are just so razor tight because of different variables. Rates are obviously a huge factor, but a lot of the deals are not even stuck on the rate, and it's not even a debt cover problem because of the rate. It's a debt cover problem because the economy is not doing as well as we were hoping it would be. So rents are either down or delinquencies are up, which is a very, very big problem. On every deal that we bring in now, the two questions that we ask the sponsor, the borrower, is A, are there any concessions on this property? Because a lot of people have to give concessions now. And B, what's going on with collections? Because different ways of reporting will show different months, like
accrual, cash.
Yeah. So you'll end up with a T12 that looks great, and then you'll go and process, and then the next month there's a delinquency of 20% that you didn't expect. So it's not just, people talk about rates all day, and rates have been a problem since they raised rates. Obviously, that's a huge problem in the market, but that's not the only problem in the market. The bigger problem that I think is going on in the market is that rents are down. People are having a little bit of a harder time paying. This world of I'm going to buy a building and raise rents drastically because people neglected to remember about the COVID stimulus money too, which was a massive effect on the way that rents were trending upwards, which is no longer available, obviously. So that's what I would say is the number one driver of whether your deal is going to work or not, aside from rates. Obviously, rates are important. So now, when you're looking at lenders, so the agencies are very, very aggressively looking to be in the market right now. Their rates are sub 5% because where the treasury is at, you can get spreads with buy downs below 100 basis points.
That probably has to be a stable class, below 100 basis points.
Yeah, I mean you're not going to get it for a high LTV. But
what are you getting in Baltimore Class B? I mean, most Class B. What's your spread there from agency?
You can still get a pretty aggressive spread. The agencies actually have a mandate to lend on affordable housing. So a lot of the stuff in Baltimore is Section 8 stuff. Right. So ironically, with the agencies, it's beautiful. It's not like when you're going to a bank.
Private banks sometimes do as well, depending.
For sure, the private banks lend, but the way that the banks generally look at assets, especially in nicer markets, Baltimore has its nice areas, but let's
Yeah. Anyone listening to this knows what you're saying. Yeah.
So the banks are, they want to see nice buildings. The agencies are looking, is this a building that's going to pay? Are the tenants going to pay, and what's the stability on the building? So a lot of times, unfortunately, for better or for worse, Section 8 is your best tenant because you know that they're going to pay, and you know that there's some sort of vetting process for them to get into it. Shout out to Jack Resnick for being the best Section 8 leasing agent.
Yeah, he knows what's going on. Yeah, we're going to actually interview him soon.
Yeah? Okay.
Yeah, you didn't hear that from me, but yes.
Okay.
I mean, everyone else heard it from me, so.
He's going to be a good interview.
Yeah, it's going to be a very interesting about what you're talking about. We'll get into that in a second, but yeah. Section 8 is the highest paying, so we'll see what's going to happen.
They're the highest, but they're also consistent, so you know that you're going to get the rent. So the agencies are actually. I just saw a stat this morning that the agencies, I believe, lent 74% of Freddie Mac's lending was to affordable housing, which I at one point when I was doing deals in Baltimore, I was like we would send out the package and it hit me one day. I was like, I'm not presenting this right. I'm presenting it as like, a regular asset in Baltimore and people make their assumptions about Baltimore. I have to tell people that this is an affordable housing property. And then I started telling people that we do affordable housing financing, which really it just means that you're lending on buildings that are Section 8. But
Correct.
So the agencies are very excited about that part of the real estate sector because they have a mandate to lend to affordable housing as part of what the government wants. So agency pricing is tremendous right now. The agency process is brutal.
Especially now, yeah.
Just because of what was going on in the market before, and like unfortunately there were a couple of bad characters, so they've been like digging really, really deep.
How, by the way, on that, how is it that, I mean, sure, individuals I understand, especially people that started post 2019. What did private banks and agency miss that, like, I mean, I'm sure you read about Meridian and Arbor and a lot, and I don't know who did what exactly, or at least I'm not going to disclose what I know, but what I will say is, how did banks and agency just miss the ball?
I think that what happens in markets, and I think this is just a trend across every industry, it's not specific to real estate, is that when things are great, people are more chill. So like anybody know when you own a business, let's say right now in my cycle in my business, I am 24/7 fully focused on the business. The most important thing in my life after my children is my business. Like that just it has to be that way.
Correct.
Because if I don't do that, I'm not going to be successful.
Correct.
And like I sit with my guys, and I'm like, if we're not going to make ourselves crazy right now, we're not going to be successful. We have to do this. But 2 years ago, deals would come by, and it was much easier to pick up business. There's a lot more business, so things were a little bit more relaxed. So I think that's what happens with lenders too. Like when there's just so much business and business is just showing up and there's no problems, I think they get a little bit lax with their underwriting. And as the market expanded and there were just so many deals and rents were up and everything was going well, they underwrote and they did whatever they had to do to get deals across the finish line. They had underwriting standards. The agencies always had a very strong underwriting standard, but I think maybe certain things that shouldn't necessarily have gone through, they got through just because people weren't as hyper focused on it. And I think what changed now is that now that they see what they missed, they're losing their minds and they're like, we have to get every single document that we learned that we missed. Now we have to get every single one. So they're like overcompensating.
There's no real way to prevent another 2008 in general. Maybe not 2008 level, but like based on that, as much stops people try to put in, everything is based on humans. And when humans, like you said, when things are good, they just process everything and a lot more lenient on the debt. And that's, I mean, the deals I'm getting these days, it's like, I don't know who lent on this. And then I hear the lender and I'm like, how did they do this? Like, what is going on over here?
Do you have like particular type of lender that you're seeing is having a hard time? Like that they're seeing a lot of
delinquency?
Or just loans that they're not getting paid on?
I think is very much, I can't even, let's say this, I see it everywhere, but for different reasons everywhere, right? At least the deals I'm getting, for private banks, it's because they had a relationship with someone and they never second guessed them. So they just, they had blind faith. Well, then the person went belly up and then their blind faith basically wasn't worth anything.
Right.
I mean, a good example of this is a huge developer locally that borrowed a lot of money from a lot of different banks and individuals that went belly up. And the bottom line is many investors that speak to these banks now tell them, I don't understand, why do you even just call us to ask us if this is even reasonable, the amount of money you're giving this person, right? So stuff like that, I think on private banks and no doc banks like DSCR banks, it's a similar story. We're like, there's just trust, so we trust him, and we're making a lot of money, so let's just push it along. For agency deals, I think what it comes down to, I think, is that the market's harder. So when agency underwrote it, they couldn't expect that it would be that much harder to evict, to just do anything with the deal. So I think, like you said, it's not really an interest rate issue or like a trust issue, because Agency, it's a little less dependent on that. Although, yes, obviously, if there's a debt broker that's pushing and they know that debt broker, they'll be more likely to do it. It's kind of like a private bank, but still, I think on the agency deals, I think going south, it's because that there's something else going on. Like there's a bad manager, right? It's usually something like wrong that happened here that the owner that bought the property should have been more careful about. Versus with private banks, there's a lot of stories that the owner was deliberately not careful and they gave the money even though it didn't make sense because of that relationship.
Right.
That's what I mean. What do you see? Yeah, that's what I see.
No, I just like in the past couple of weeks, we're starting to see deals that are starting to come around that people are buying that were distressed or whatever it was, whatever was happening, that the bank is finally coming around and saying, okay, we screwed up. We're going to lose money here. Like, let's just come up to, like, we're doing a few refis on guys that are getting DPO discounted payoffs where millions of dollars are being shaved off of the loan amount because the bank says, hey, this is a good guy who's really doing his best, and the market's just not there anymore. Or like, I'm going to keep him in a 7.5% rate because that's what my spread was according to on the reset on the loan agreement originally, and he's just going to bleed to death. Like, and he's just going to lose his building and give it back to me. I don't want that.
It's going to be worth a lot less if they don't take care of it now.
Literally, and then what? They're going to go sell it on the open market for half of what it's worth and go through the whole process, and then they're, one of the bank's main concerns is like, what are the investors in the bank going to say? We have to get these off our books
because you have to send the report.
Well, they have to have reporting. The stock market looks at the banks and they say, what's going on? Why are these guys? So a lot of times it's worth it for the bank to negotiate something. Obviously, we hope all the banks, our banking relationships make their money back, but at this point in the market, it seems like it's something that has to happen. There has to be some sort of reset.
Agreed. I think that's with private banks. The funny thing is the deals I'm doing with agency where the agency debt need to take a haircut. And this, I think with agency, another problem was that appraisers, like, in my personal opinion, and you can let me know what you think about this, I think appraisers are just complete. They're not garbage, but unless they're, like, very actively talking to different owners and lenders, they don't know what they're talking about.
Right.
So Fannie will send out an appraiser. He does his appraisal. Everything looks great, but, like, he didn't look into the facts of the deals he comped. And now I have a deal, for example, where I'm working with the servicer and the agency, and the loan balance is just so high because whoever appraised it just said, yeah, for sure, it's worth that. The money could afford it at the time based on whatever documents whoever sent them. And now the agency is saying, oh yeah, we have to go through receivership or we have to go through the process that the loan docs put because that's the way that pretty much any agency debt works, right? Which is funny to me because a private bank would say, no, we're not doing that right now because that's going to take 2 years and the property's value is going to go down by a quarter. So, like, that doesn't make sense. So they kind of tie themselves into having to go down this hole that doesn't actually even benefit them, which is interesting.
I mean, to your point on the appraisers, I think that there's so many factors that go into what a lender is determining will allow them to lend a certain amount of money. The appraisal is like the last item. I know that sounds crazy, but
with agency, though, the question, you think that's also the case with agency?
With everybody, every lender. The most important thing to them is that they know that their mortgage is going to be covered. So
Correct.
They're looking at the net income at the property.
Correct, yeah.
And then making sure that there's a cushion on that. I think that it's very easy to blame appraisers, but appraisers are just coming in and saying, this is a property, there's 400,000 properties in this area. I can pick this one and I can pick this one. Which one is it the most comparable to? This one, the building I'm appraising is 100 units. This building has 130 and this one has 70. Which one do I choose, right? And it becomes more of a doing your best kind of thing. And some appraisers are better because you can say the flip side also. You can have an appraiser come into a building and say this building looks like, I'm buying a building for $10 million or $20 million, and the appraiser comes in and says, well, you're buying it for $20 million, but there's a building down the block that has a similar whatever that sold 4 months ago for $15 million. So your building's worth $15 million. And at that point, you kind of say like, okay, but this is the reason why it's different, and I'm buying it for 20. Like it's not even like I could prove to you that it's worth 20 because I'm buying it for 20. So there's a lot of speculation is the wrong word. There's a lot of variables that go into what appraisers are appraising. So I think that the bigger factor that goes into what happened with a lot of these deals is that, again, back to the rents. Like, Fannie was underwriting the rents that they were provided. There was enough of a cushion that should have been able to cover their debt cover. So when these deals are going bad, I think the appraised value is like the last thing. That
Right.
was real
And the
problem,
appraised, I
you know
mean,
what
also not just obviously the commercial appraisal. It's not just about comps. It's about the DSCR. It's about
Yeah.
the cash flow. It's about a lot more than just that, including rent comps. And I think like so I don't know how that deal went through. I just don't understand it when it
Yeah.
comes to just
Well, yeah. I mean, it's just so interesting to me because like when I was younger, when I first started out, bankers and banks just seemed like all knowing, right? Like they knew everything. They had all the data and everything. The end of the day, everything boils down to, like you said before, it's a human touch. Like humans either create amazing things or they make mistakes, and especially in an exciting market, the chances of mistakes are so much higher. And it's like kind of like hot potato, you know, like who's gonna be the last one? But I mean, as far as we started talking about this earlier on, but in the market right now, I think there was like a couple of years where lenders had to like be like, holy crap, like we really got
yeah.
lost a lot of money here, and we made a lot of mistakes. Let's regroup. And we've been seeing over the past 3-4 months, a lot of banks that were out of the market are starting to slowly dip their feet back in and see like, hey, where's the market at? Can we start lending again? A lot of new lenders from other, like we're doing business now in New York with a lender from Ohio, where we're tying up a retail deal in Lakewood now at a rate in the low fives. Actually, it's
Wow.
retail with a bank in Ohio. Like the market is starting to slowly open up again. That lenders are in the market, and the exciting thing that we're seeing is that even though they only lowered rates a quarter of a point, and treasuries went up a little bit, but treasuries are down 50 basis points from a couple months ago. The 5-year.
You look at the 5-year?
I look at the 5-year. I'll explain to you in a second.
Okay.
But and we're just seeing lenders get aggressive again. Like it's exciting because lenders are competing. Lenders are lowering their rates to try to make deals work. And that combined with the lenders recognizing that they kind of just have to get a lot of these deals off their books, I think it's a tremendous opportunity to be buying. Like
It's interesting. You don't think lenders are going to be more careful now that delinquency is up? Not
they
rent
know,
delinquency, debt delinquency.
They know what they're getting themselves into. I think that the biggest problem in the market the past 3 years was that people just didn't know what was going on. People are waiting for rates to drop. People are still waiting for rates to drop. I say this every month on on LinkedIn, and I post it wherever I can. I say, if your game plan is that rates are going to drop, you don't have a game plan. Like that's just not.
That's not a strategy. Yeah.
It's not a strategy. Like yes, I understand a lot of people are in a bad spot, and I really, really hope rates come down. I do because it'll help. Even 100 basis points at this point will be huge for so many people that are in trouble. But if you're not going to go look at your company and say, did we manage this well? Did we buy well? If you're not going to be able to go do that first, then your game plan of rates going down is just not a game plan. If you go into your business plan and you say, hey, I need to raise rents by X, Y, and Z, I might realistically be able to do this. My company, this is the best management company I'm going to have, either in-house or hiring third party, and you're still at a point where like you need rates to go down. Okay, great. That at least you have a business plan, you know.
Right, it's a cherry on top of it. Like if you're making money and you're gonna get more because rates go down, great. But like it's funny. I think I just made a video on this for my LinkedIn and my social media. Like rates are, and I said like yeah, rates are down 25 basis points. Beautiful. So that means that now you're gonna make a little more, or if it was on the line, okay, the deal works now. If it was on the line. But if you're like you're far off and you're struggling, for most people that are seriously struggling, it's like it doesn't actually materialistically change that much. You know what I'm saying? That's the way I look at it.
I agree 100%. I think it's. I mean, I'm curious to hear on your side of things because I've been waiting for a point where it was like, okay, this is the best time to buy. And I spoke to a ton of my friends that are owners, and they all told me the same thing, that like there's no one point where it's like the time to buy because there's so many variables. But like, in my opinion, now is the time to buy because rates are down 50 to 100 basis points. Banks are starting to come to the table again. Sellers are starting to come to the table again. a lot of them have deal fatigue. I would imagine.
Correct.
Tell me, I'm curious to hear more.
Correct.
But it just seems like yeah, this year sucked because this year was really challenging. Thank God we did a lot of business, but every single deal was a huge headache. And even if there was no rate problem, it was just the lenders are looking,
Always
or scrutinizing stuff, or nobody's really that excited to close a deal because it's kind of like showing up and like, you know, getting you're paying 5.5%, 6%, and like, yeah, it's better than it was, but it's not exciting. So like, it's been a hard year, but like, I really am very, very optimistic as to where the market's going, and I'm curious to hear if you see things starting to move more than it was, or have you always been seeing things going like moving? Nothing's been changing really.
Materialistically, what changed, in my opinion, is that owners realize that there is no alternative to selling at a loss. I have many owners that I work with that have been trying to figure out different ways, and you know what? I've helped owners. I've really helped owners get their properties in a lot better place because. It's weird, and people might find me crazy, but I helped an owner fill up 20 units that if I did it, they would have had to sold at a loss.
Right.
And they're actually not selling because thank God they're successful now.
Right.
But
that's a crazy thing to do.
Meaning I didn't physically lease. I don't lease at all.
Right.
But I got them connections, and I said, reach out to this person, reach out to that person, try to do this, try to do that.
When they would have sold if you hadn't done that.
Yeah, and I told them don't sell because you know what? But those owners that I helped and still couldn't make it work, those owners are like, okay, I need to sell at a loss now.
Right.
Like, we tried everything.
We
went through the process. Right? We figured out that this deal just doesn't work today, and now let's sell at a loss. And you know what? Over the last month, there's been many, many deals that went under contract at a loss, and I'm talking about thousands and hundreds of thousands of dollars of loss just being wiped out because it is what it is. Like, right now, I think that is what's changing. Now, the thing is, buyers, funny enough, a lot of buyers are still in the mindset that owners are not realistic. So a lot of the deals that we're doing, buyers, first of all, are afraid, because, especially in Maryland, buyers are afraid with everything that's going on here. But in general, buyers are afraid right now, is what I'm experiencing. They think owners still want numbers that are not realistic. But what I'm doing now is I'm telling people, listen, owners are taking massive haircuts. There's a deal I got under contract where I had many buyers that told me, oh no, it's going to go for too much. The guy ended up getting, the buyer that I brought ended up getting an amazing deal on the property. The owner didn't have a choice. He's just like, let's just do it. And then I called other buyers after that I brought the deal to that said, I'm not going to even offer because it's too much, after I tried to pull teeth from them. And I told them what the other guy got it for. And they're like, damn, I should have done it. And you know what? The next deal I got, that buyer went under contract. Honestly, that guy who said I should have got the other deal went under contract. And that deal was also at a loss to the owner. Because at the end of the day, now, right now, it's not a seller's market anymore. It's a buyer's market. Therefore, I think buyers need to realize that. But more than ever, buyers need to be careful. That's what I think. You're going into hairy deals, right? I don't care what the owner tells you. Most deals that I'm doing is hairy these days. And you need to roll up your sleeves as a broker.
What are you seeing as like the most hair on deals?
The most here in Maryland, I mean, most deals I'm getting is at a 70% expense ratio.
Wow.
So, number one, out-of-state owners that are using managers don't even realize how much they're getting ripped off. That's number one. So, they're coming to me. I recently did a BO visa for someone. I hopefully get the deal. But my expectation of me getting the deal wasn't high. Not because I didn't have confidence in the deal. Because I know they don't even realize how bad the property is being managed. I had a conversation with them. I did the whole BOV process with them. And they might list with me because I show them what's going on. But I'm like, you guys are running at a 72% expense ratio, right? They're like, what? I'm like, yeah. I just sold a property not far from you. That guy was running at a 50%, 45% expense ratio. He has the same exact property, same condition. I can't even believe how it was almost exactly the same to their property.
Right.
Their property was a better location, lower rents, more delinquency, and more vacancy. And their managers is running at a 72% expense ratio.
This is a third-party manager?
Yes. And this third-party manager, without naming them, is considered a good manager in the market. I can't even tell you.
Why was it? Why was it at 70? Just because they didn't care?
What, the manager?
Why was it at 72%? Yeah.
The owners have a full-time job. The manager is considered good, but probably has a lot of properties. This property for them was probably on the smaller side of properties they manage. And therefore, how are they making money on small properties? Your 10% on delinquent tenants is not much, right? So maintenance.
Right.
Maintenance bills I've seen are just ridiculous. Charging 100, not this group, but a different group I saw, a manager, charging like 150 an hour just for the maintenance guy to be there before anything else, then tagging on bills for every stupid maintenance job. The amount of T12s I'm looking at, and I try, so that's what I'm telling you, is that I tell owners, before I do anything, I say, listen, let's have a T12 analysis. What is going on here? You might not even have to sell. You might have to fire these guys and then meet with me, other managers that are not doing this garbage. And some cases it help people, and they're able to actually make it work.
Right.
Some people unfortunately realize it's too late, and now their lender's knocking at their door. Why aren't we getting paid? Why are you not refinancing? Right. And the owners are like, I don't know what to do. I can't refi, I can't this, I can't that. And that's where we get to where we are now, where owners need to make decisions. But yeah, I think, unfortunately, just one aspect is the management. The other aspect is that in Maryland, it takes 4 months to evict. And with Section 8 tenants, it takes about 2 months to actually get them in. At any point, a Section 8 tenant backs out, there is no repercussion. They could back out the day before lease signing after you did your $5,000 in fixing it up after you already renovated because Section 8 found a bunch of things that you didn't even think was even necessary. So now you spent $5,000. It took 2 months. You had your rent offer negotiation, everything. This happened to me on a property I own.
Right.
The day before lease signing, the tenant says, I don't want the property. Sorry. Remember, the summer season's what, 2-3 months, 4 months for leasing? It happens to you twice for a few units. Those units are not getting leased at that's it. So putting it all together, that is where the distress is. So buyers that are hyper-focused on what to do with the right managers and the right team could get very good deals right now.
Right.
But buyers that don't have that in place, I'm concerned to work with them because
I think that really is such a valid point as far as just the market in general. Because buyers that are coming into the market that want to just do the third party management and hope for the best, they can't raise equity. I think that what I realized a few weeks ago, I realized a while ago, but what really, really seeing now is that guys that are really buying now really, really know what they're doing. I don't have guys coming to me buying a deal with, we'll figure it out. Every single one of them, like this deal we just closed in Baltimore, the manager, one of the partners, is a Section 8 expert, and he will kill it with this asset. But so many other people looked at this asset, and they had a hard time making the numbers work. So just being able to go into an asset and say, I know this process, I know what I'm going to do to fix it, I know how I'm going to build this up, it's really the only way to buy, and it's the only way to raise equity.
Correct.
In today's market.
Yeah, because people want sponsors that could execute.
Right.
And third-party managers are not executors because they're getting paid. And this is just my opinion of why there was so much BS going on, because people that work off of fees that don't have repercussion for their fees because they just have so much business, like managers, they just do whatever the heck they want. And if you're a small property to them, no problem. Go to someone else.
You can be a huge property to them. I know tons of people that raised money, and I know stories about it that they just stopped working the asset because if you're raising capital and then you realize you're not going to hit your promote or something, what are you doing?
Correct.
Why are you still there? But you're not going to call your investors and be like, hey, I'm checking out. So the investors are finding out later in the game. It's crazy. It's really, that's why I think it's a good time to buy, because you first start buying from, either a lender that's trying to get rid of an asset or an owner who can't refinance because he has a maturity. And then as time goes on, all these syndicated deals are going to start. Either, God willing, everybody will be able to figure them out because there's so much money in these deals. But if not, first it's the syndicator accepting that they did a bad job, or even if they did a great job, they're not going to be able to execute their business plan. Then you need the investors to come and accept that that's the scenario, which I think we're a few months out on that.
It's so funny that you said that, because I have a lot of deals where it's the owner's like, get on the phone with me and my investors. Just don't tell them what's going on at the property.
Right.
I'm like, wait, what? Just don't tell them vacancies at 40%. Wait, you don't want me to tell them?
What do you think? What do these guys think is going on? Right?
The guy's paying them out of pocket for their pref. And they're just like, oh, we're selling at a loss? Why are we selling at a loss?
Because they thought the asset was performing great.
So he wants me to tell them the market's doing bad, so we have to sell at a loss.
Right.
But I'm like, that's a weird conversation. I don't know if I want to do that.
Right. What'd you do?
What did I do? I let him deal with it.
You let him deal with it.
I'm not going to lie to people.
Right.
if he wants to get the deal done, I'll let him do it. But like, I'm gonna sit there and not tell them that's 40% vacant.
We have a similar thing with lenders also, because a lot of clients will be like, or like they'll call us with a real issue, like they had some sort of foreclosure, or something came up on their name, or they're in a lawsuit, or again concessions, a lot of stuff like that, and like they'll be like, obviously what's our game plan, and I'm always telling them, like, let's just bring it up. Let's bring it up to the lender. The chances of them not finding out about it at some point are very slim. But even if not, like, we have these relationships. You as a client want to have a good name in the marketplace. Like, just bring it up. See what happens. Because chances are they're going to find out anyways, the lender. So
I have owners that are trying to get around that. A lot of owners are trying to get around that.
But it doesn't work. It doesn't. And especially, and I tell people all the time also, like, 3 years ago, you wanted to play some sort of game, I'm not going to be involved in it, but like maybe you'll get it done. In today's market, if you want to, like we were talking about before, you're not going to slip anything by anybody. It's just not. It's not going to happen. And if that's the only way your deal is going to work, you're going to be able to get a refi. You're in trouble. You're done, because you can't pull these things off anymore.
Right.
But on the same vein, which I just found out this morning that you spell vein VEIN in that,
and not
circumstance instead of VAIN.
Yeah.
Anyways, in the same vein, the lenders are, because of what they've seen in the market and because they've seen how bad it could be, when you come to them and you're like, hey, this is a story. There are so many lenders in the marketplace that are like, awesome, we can figure this out. Like, we can make this work because of X, Y, and Z, or whatever it is, because they're motivated to do deals again.
Correct.
So I think that the idea of just being straight with all the people around you in today's market is the most important thing. Not that I ever justify not being straight with everybody, but just from a business perspective now, like,
there's no
even if you're the greediest guy in the world, from a business perspective, everybody knows you're caught with your pants down. Everybody knows what's going on. Yeah. So just be straight. Just tell them.
Yep. I have a deal I'm doing. I have to be very vague about this.
Just be vague. Make up the units.
Whatever. It's a 100-unit complex where whoever. Okay, I don't even know who was the one that was playing games, whether it was the agent, the owner, or the manager. Well, I know for sure the manager. Question is, after that, who else? But it happens to be in a rare occasion I'm representing a buyer. Not a common thing. Happens to be I'm representing a buyer because I've done deals as seller agent, and then this guy bought stuff, and he's like, if you have something like this, just let me know, because that's what I'm buying. So then I found it, so I'm representing him. Bottom line is, I get the information, and I'm promised beautiful properties, stable, right? Great. The manager never even sent us a delinquency report. They told us that everything's good. The guy closes on, so it's it's 50 units here, 50 units there, okay? So he closes on the first 50 unit, and all of a sudden he's filing for eviction on a lot of tenants that were paying. So we request a delinquency report for the next one because we split it up. And the delinquency report shows that there's only 3 or 4 paying tenants.
Paying?
Yeah.
Wow.
And I'm like, what the heck is going on over here?
And
whoever owns it sitting at a state just twiddling their thumbs like,
they have no idea either, the seller.
The seller's like, no, we get like a quarterly report from the manager. And then we like go through the report, and then we go to one unit that's paying just late a month. They're late a month on their rent. Fine. We go to that unit and it's boarded up. So
nobody's even there.
It's boarded up, like
right.
Late on a month on their rent. What is going on over here? So yes, there's a lot of like every time I open it up. But you know what? What I realized is like I'm not even surprised by anything I see anymore.
Right.
It's like it helps giving owners and buyers perspective, because for them it's like, what, this happened? I'm like, yeah, this is like happening every day. Like this,
right.
I'm glad to know that this is the problem.
Right.
You know, like,
figure this out.
Yeah, there's going to be a problem.
Big mold problem.
Exactly. There's going to be a problem with the transaction, whether it's the appraisal, the inspection, whatever it is. But I'm glad we figured out which one it's going to be. Right. You know what I'm saying? Right. Like now we know what we're dealing with.
No, it's like every day I wake up and thank God we have a lot going on, and every single one of these, not every deal, but a lot of the deals, the issues that come up are so out of left field. And it's like some of the stuff I've never experienced before. And like, I'm involved in legal language that I'm not a lawyer, but if you want to get deals across the finish line right now, you have to just do it. You have to just show up and be like, okay, I'm going to figure this out. I'm going to find a way to get this across the finish line. And the conversations that we have over and over this year was just, you're going to get knocked down. When you get burnt out, take a minute to yourself, but then you stand back up and you just keep pushing it and you keep pushing it. And I really believe that not only is it a great time to buy, I think it's a great time to grow a brokerage, whether on the sales side or the mortgage side, because if you have the patience to sit through deals that aren't closing and sit through owners that are looking to buy that aren't really buying, or deal with guys whose loans just don't work. Like I have a list of deals that are on, we have like in our system, we have a back burner, like portion of the deals, and there's so many. And a huge portion of them are just trying to raise rents, or their game plan is waiting for interest rates to go down, but it's not even their game plan. It just doesn't work. They did everything they could, And what I found though is that I'm doing this for 13 years. Until 3 years ago, it was really hard to reach people. Like you reached people, you had a new client, a smaller guy, whatever. That's how you were building your business. Now anybody will talk to you because, yeah, obviously people are loyal to their brokers, but a lot of the brokers that they were loyal to are out of the business because they just either they couldn't sustain it or because their clients stopped refining.
Or so there's a lot of brokers that like squeaky clean deals, and they're not going to help you. Like
they just don't know.
They're not even going to help you. Right. Like I had a meeting yesterday with an owner. It's like, this is my criteria, blah, 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 blah. The guy owns a lot of units. They're institutional level. I'm like, by the way, for that property owner over there, they have leasing going on. If you need leasing agents, just let me know. Because I have leasing agents that actually execute.
Right.
Out of the whole conversation, he was like, he stopped. He's like, yeah, no, I'm going to let you know about that actually.
Right.
Because, it's just like, right. Like, yeah, like, it breaks through that veil of like, right. Yeah, I need to lease this thing at the end of the day. You want to be whatever you want to be. Like, I have the contacts to help you versus the brokers that are just like, oh, it's too delinquent. I'm whatever. You figure it out and come back to me.
Right.
Like.
It's really, like, I don't even expect deals to be easy anymore.
Yeah.
Like, and throughout my career, because I started on the banking side, so I really saw a huge amount of deals. And I really learned a lot of very, very complex, like I was involved in a lot of complex transactions. So now everything feels like a complex transaction, but I don't want to say it's easy because it's not, and every deal has its own hair and whatever, but it's kind of like what we're prepared to expect. So we're actually able to build in this market. And hopefully as time goes on, obviously you get your clients grow and you get easy deals, but it's not anything that we expect at all.
Yeah.
Anymore. But on the point of like bringing the leasing, like I'm realizing now that because people are having such a hard time raising equity, and I speak to so many people all the time, like I'm starting to slowly, I always told people like, we don't raise equity and I'm not going to be involved in your equity, which to an extent is true. I have friends that are equity brokers, but I also believe that if I have a client who's having a hard time, I'm going to go find them equity. And we've done that. Like we've successfully done that for clients. So if we're involved on the debt side and we're doing your loan, I can go present a guy that I know that has equity and say, hey, I'm doing this deal. I know it like the back of my hand. You should consider investing in this deal. Correct. So we're starting to try to help people with that slowly but surely.
And you know what? I don't take referral fees for stuff like that. I try not to.
Yeah.
I try not to because then, first of all, I don't gain benefits, and it's honestly my trying to help them. For that reason, I also try to stay out of it. Right, so this is the contacts. Do we have to do? They're not paying me.
Take no responsibility for it.
Yeah, no responsibility. But this is contacts that have helped other people before.
Right. Yeah. I just like when you're trying to grow your business, it's really, really nice to see people appreciate what you're doing for them.
Correct.
Like and like also like when we close, thank God, all our clients have been very happy after we close. Yeah, everybody's been happy.
I have clients.
Not everybody's happy about the rate. And during the process, they'll yell at us and they'll be upset.
Right.
Like, once you close, like they're like, wow, there were a lot of deals that we closed last year and this year that we were like, wow, that was like a really challenging deal. Like I believe we got in the best deal, but like I hope, and they'll call us afterwards and they'll be like, listen, I just want you to know at a certain point in the process, we showed it to a couple other brokers and they couldn't get anything close to what we were getting. And that was so validating because it's really hard to know that.
those are the brokers like yourself that stick in for the long run on tough deals. Many
Right,
brokers
right.
just say they're throwing their hat.
Right. Like, I mean, that this deal just closed. It took us 7 months or 8 months, and it died multiple times. The real reason that deal closed was A, because we stuck it out. The client was amazing, and they were more persistent than we were, which is very rare. But we have a really, really good relationship with the lender, and the lender was so patient. Like, they had a million reasons to just walk away from it, but and my partner Mike, he's not here, but he's really, really amazing at maintaining our lending relationships, and the lenders just love him.
And that's
He's a very
why,
likable person.
yeah, and by the way, that is why you need brokers and you need professionals. When I lease a property I own, I'm not going to lease it myself. Like, why would I do that when I have people that know everything and everyone within that field?
Right.
Right? If someone would have gone to a bank directly and the deal went kind of sideways, like the deal you're mentioning, like, and then he calls the bank stressed about it because it's his deal, and the bank hears that kills a deal. You need someone that's like, obviously you want to close it, but like it's not your deal in a way, and you could have that conversation in a calm way, move it along, and I think that is extremely important. The relationship, the third being separated but in it at the same time. You know what I'm saying?
Yeah. Yeah, I mean, we have a deal that we're working on for months now, and throughout the process, the lender and the borrower started to just feel like there just wasn't, in the beginning, everybody was excited, and they still like each other, and they still get along with each other, but there was like a kind of a little bit of like, what are you doing? What are you doing? And like, we had a call with everybody, and I just listened because I wanted to see like what everybody's position was, and we hung up, and the client called me up really upset that I didn't talk on the call, and I was like, I listen, like I'm always open to criticism, especially from a client, and my personal opinion was that I did the right thing by not talking, but on the next call I was like, okay, like this is what we're gonna have to do. I'm gonna have to get involved, and it was a disagreement between two lawyers, which is really not supposed to be my
right.
I'm not a lawyer, but luckily because we were on the call, I was able to say, hey, you're saying one thing, you're saying another thing, you're both agreeing with each other.
You're hearing it
nuanced, but it's so nuanced, the difference between what you're saying, that because you're so frustrated, you're both so frustrated, you're missing that nuance.
I just had that. It's
and we're gonna close the deal because of that one phone call, which was so mind blowing to me that my client was right. He was right. I should have talked on the first call. I didn't. We fixed it, but if we hadn't been on the call, the deal would have blown. Not even a question.
It's so blown up. Literally, the exact thing happened to me just now, where they were saying the same things, but when I spoke to each of them individually, they understood it like that. The attorneys and their clients both understood it differently than what they were saying. So I got in touch with each side, and I said, guys, you agree here. You're actually on the same page. And then once I did that, all of a sudden, everything started moving forward again.
Right.
Like,
it's such a crazy thing, because people also ask me all the time also, like, either why do I need a broker, or what do you bring to the table other than another broker? And the reality is that nobody needs anything. Do you want to get a great deal? Do you want to have an amazing process?
To close.
Yeah, I mean, you can probably, if you're buying a property, you can probably call up a bank and get some sort of loan from the bank. You know, so yeah, don't use. I don't know.
Yeah,
we don't. But just, you asked me originally like what we're seeing in the markets.
Yeah.
As far as lenders, so the banks are getting back into it. The agencies are aggressively lending. What we're seeing, which again is for better or for worse, is that a lot of deals are very, very debt cover constrained. They're having a hard time reaching their refis because they're just not, the underwriting doesn't allow for the loan amount that you need. So obviously, I'm sure everybody's familiar with the CMBS market and what they've been doing. We've done a ton of CMBS debt over the past 2 years, which I started out in the beginning of my career. I did a couple of CMBS loans, but nobody was really doing a lot of CMBS debt over the, in the interim. People were going to the agencies. They didn't need to. The CMBS market has been a savior for so many of our clients. I can't tell you how many guys came to me and they said, I'm not taking a CMBS loan. And I said, I agree with you 100%. There are certain covenants in the loan docs. The cash management sucks. But then at the end of the day, when you look through the underwriting, we have like, rates are down, so it's not like an exact number, but basically when we look high level at a deal, you can multiply the NOI by 10 and you'll get to your loan amount from a bank, or even kind of from the agencies.
So kind of like gross rent multiple, but on NOI side.
Right, exactly. So you're looking at an NOI, you multiply by 10, and you'll get your loan amount, right? So if I have $1 million NOI, I'm going to get a $10 million loan.
So like a 10, I mean, in that case, a 10 cap. Yeah. No.
No, it's not even the value. It's not a value issue. It's a debt cover issue. So
right.
There are debt yield constraints with CMBS, but with CMBS, the way that they underwrite, most banks are underwriting to principal and interest. So if you have a 30-year amortization, and whatever that number is, you end up somewhere around. With CMBS, they underwrite to interest only. So they'll give you a 5-year loan, full-term interest only, and they'll underwrite to that interest only. So that means that they don't worry about the principal payments because there are none.
Correct.
But a lot of lenders will give you, like the agencies will give you 5 years interest only, but they'll underwrite to a 30-year amortization.
Which is why you're tracking the 5-year then.
Well, that's one of the reasons I'm tracking the 5-year.
Got it.
But the CMBS market will underwrite to the interest only, so you end up with like, it could be 20%, 25% even, sometimes higher on the loan amount. So it's saving a lot of people. So if you're really tight,
you need a refi, yeah.
You need a refi, even though the CMBS covenants suck, and they're really, sometimes it's challenging to deal with them, but would you rather give up your asset or would you rather just do a loan?
Correct.
The reason I'm tracking the 5-year and not the 10-year is because unless you're like a real family office or you're doing a HUD loan, nobody has accepted the idea of signing anything longer than a 5-year loan. Most of our clients are coming to us now and saying they want 3-year deals, or they want, like I have multiple clients. I have a guy, it's a $12 million loan, a refi on a building in Queens, and if we went CMBS, we would be able to refinance him out, but because it's tight, but he wants to refinance in 2 years when he thinks rates are going to come down. So locking yourself, CMBS, you have to lock yourself in for 5 years, or it's yield maintenance. It's impossible to pay it off. So he doesn't want to lock himself in for 5 years because he's optimistic. So now we have a deal where it doesn't work on a bank side, it doesn't work on an agency side. So you can't get a prepay, but he doesn't want to take CMBS. So what's interesting in the market is that on top of the CMBS lenders, a lot of funds are starting to come into the market that'll underwrite to full-term interest only, but they won't have the same covenants as CMBS. So their rates will be a little bit higher, like 50 basis points higher than CMBS, but they'll give you some sort of flexibility on your prepay, so you can get like a 5-4-1-1-1 or something like that. And the either they don't have cash management or the cash management's not restrictive. So it's just really, really exciting to see how many different options are coming to the table and figuring out solutions to massive, massive problems that were in the marketplace. So
that's amazing.
Yeah.
So before we finish, I went through a lot of good stuff. Before we finish up, I did actually, recently I've been tracking.
Much more exciting than I thought it would be.
For the podcast?
Yeah.
Because I get right into it. For me, it's just a conversation, honestly.
Yeah.
And I jump right into what I want to talk about. And then like, once you realize that it's not like a buttoned up.
I thought you were going to have a paper with questions, and I was like, oh, God, I'm not going to do good.
Did I give you a paper before?
No. I'm not good at that stuff.
When I invite people to my podcast, it's because I have questions that I want answered, and my assumption is that I'm assuming other people have the same questions.
Right.
So I just jump right into it, and I try to, like, get...
You did a really good job.
I appreciate that. So another question I had, which I want, and then after, by the way, before closing remarks, I always tell the person here, if you had anything on your mind that I totally skipped over, let me know. But I have seen recently deals go into contract locally that the numbers didn't make any sense to me, and I wanted to know your perspective on how someone's able to do that right now.
So, back to our earlier conversation, when the numbers don't make sense, do you mean that they're buying it at a crazy price?
That's what I mean.
Like there's no juice, like they maxed out the property?
I mean, even if there's upside, I don't understand how. I mean, post-podcast we could talk specifics, but podcast-wise, I don't understand how they're going to make, like, I know the deal. I don't care if they could raise rents, like, at the price they're buying it,
It just seems impossible.
Yeah, how are banks going to, like, are they still that honestly, ignorant?
Like, I don't know. I'm not, like, I'm not seeing a lot of people buying deals that are like that.
The buyer is very sophisticated. Sophisticated buyer. So first of all, I don't know why they're paying that much. But putting that aside, I don't know how they're going to get that debt.
The number that they're paying, is it per door, is it lower than it would have been 3 years ago?
No, I don't think so.
No, really.
I don't think so. I think it's higher.
Wow. I mean, again, the agency money is it's in the high fours, which is obviously not super cheap. But if you were buying agency, if you're buying a deal with the agencies 4 years ago with 10-year money, your rate was 3.5%. So you're at there's only 140 basis point difference right now if you're looking at the 5 years. So it's really cool, honestly. I think people are misjudging that, but I don't know. Maybe are they in a 1031? I don't know. I'd have to see the specifics.
It might be a 1031. That might be it. Otherwise, it's not common, but I still see some deals where it's like,
how?
Huh?
Like, how are you? Yeah. I mean, I definitely see deals like that. I'm seeing in New York a lot of deals we're seeing are foreign buyers that need to just come in and buy real estate. I think a lot of families, a lot of wealthy families sit on the sidelines for 10 years, 15 years, and then they come into a market like this and they just clean up because they know they're buying things, the value that they're paying per square foot or per door is so much lower than
what they would have gotten.
What they would have gotten 3 years ago, that it's just like, I have to buy.
Correct.
Like, obviously nobody ever has to buy.
They want it.
Like,
Yeah, they want to buy.
They're like excited about it. I find that the Baltimore market is so unique in the sense that you really have to know what you're doing to make money. And third-party like you said, like third-party management in certain markets, you can make money. Like a lot of people in New York use third-party management.
It's funny because New York is tighter on restrictions than Baltimore.
Right, but so the managers know, and you could find the manager, and there's not that much of a certain areas of New York, you know you're gonna have delinquencies, and certain areas of New York are just like people pay their rent. If you're buying a nice Class A multifamily in New York, the chances of somebody not paying their rent is not that high. So it's just more of an operating expense thing. So, the operating expenses on a lot of these buildings are much lower than the garden style expenses. So, but if you're buying in Baltimore, like you really, really have to have boots on the ground. You really have to know what you're doing.
Yeah.
And you have to make sure that your partners know what you're getting yourself into. You have to make sure that you're working with the right lender. Like a lot of the business we do down here is the agencies, and a lot of the stuff that we do is bridge money. But there are a couple local banks here, like that when I hear their name, I walk away because I'm like, this is a relationship bank. This guy they know the market. They'll give you. I mean, maybe these are guys that are losing their pants because they were lied to or whatever it was. But
almost, I could, yeah.
I know, yeah. I know banks here that just know the market, and then they can really clean up.
They know the market because they've been burnt.
Well, maybe, but I'm saying they also know the market.
Listen, Sandy Spring was bought out, right? So.
Yeah, Sandy Spring was my biggest competitor.
People's Bank was bought out from Pennsylvania. So, yeah, that's as much as I'm going to touch on that.
Lenders still like this market, like with a good story.
Because it's like you said, it's affordable. Baltimore has that affordable,
right.
pizzazz to
it.
But
you have to have a good story. Like you can't just expect that you're going to throw together a deal and hope for the best. Like
you'd be surprised, by the way. I closed a deal, multi-million-dollar deal, where the buyer didn't even have tax returns.
Yeah, but agencies don't require tax.
No, it wasn't agencies. It was like a type of lender that would.
Right.
I guess they definitely figured it out. Yeah, I don't know, whatever. I'm not going to get into specifics, but they figured it out. Awesome, man. So last remarks before we head out to the end of the podcast. Anything you had on your mind that we just didn't cover and you wanted to share?
I feel like we covered a lot of stuff.
We did, yeah.
I really just, I want to repeat, I feel like anybody that's in this market, especially as a broker, it's really, really hard. I don't know anybody that's having an easy time right now. But if you made it this far, if you're here at, what time is it? 10 to 2 on September 18th in 2025, and you're still in the business, we're close. We're getting there. I have to tell my guys every day, keep your heads up, keep pushing, keep going, because deals are challenging. But I really, really believe this is a massive opportunity for people that can stick it out.
I agree with that.
On the buy side, on the ownership side, on the brokerage side, just to all my, I really just feel like I want to shout out to all my broker friends. If you're still here, good job, and just keep going.
Keep chugging.
Because this is a business that's been around forever. AI is going to change certain parts of it. I'm sure. I'm not a technology guy at all, but I'm sure that it'll enhance certain things. I'm sure you're going to have to up your game in certain ways.
Or get rid of the squeaky clean agents.
It'll get rid of the squeaky clean agent. maybe not. I don't know. Banks have a lot of regulations. It's hard to really break into
Navigate it, right? Fair.
But the best part about being a broker is the relationships that you build with your clients. Like, that's my favorite part. I'm friends with all my clients. So like, AI can't take that over. I mean, for the most part.
Right.
ChatGPT is a lot.
It's a relationship game. Yeah, it's a relationship game.
Just keep building relationships. Now is the right time to build relationships. Be straight with your clients. Be completely honest with them about what they're getting themselves into. If I'm bringing a client to a new bank that we haven't closed with, which is unique because in the past I had closed with everybody, and now because there's new lenders coming to the market, I tell them, hey, this is a new lender for us, and but I'll always have the same. I asked the lender today. My first question before we signed the deal was, what do we need to worry about that's going to kill this deal? And he went through it and he explained to us, these are the 5 things. So I called my client and I said, hey, these are the 5 concerns. This is how we think we can mitigate it. But just know, going into this is something that's going to come up, and we're going to have a good explanation or a good story.
Yeah, I just had that call today. I got an offer on a property, and the first thing I did is I called the buyer, and I said, listen here, we're having a conversation here to mitigate all the problems that I've dealt with. Let's talk. And I told him, if it's not a good fit, then you're not going to buy it. But I'm not getting my seller under contract with someone that's going to run circles.
Right. It's hard to do that. It's a really hard conversation, but
because you want an offer, you want to close.
You want to move, you want to push,
But like contracts or marriages, getting out of them, not so easy.
Right.
Right?
Right.
So if someone has a flashy offer, but they can't close, and now you're stuck in it, doesn't really mean anything.
And he could drag you along forever.
Yeah, they could. With attorneys, if they wanted to, they could.
Right.
So you have to know that.
Yeah. But all right, thank you so much
Dude,
for having me.
Thank you for coming. I know you came in, but it was a good podcast, man.
Yeah.
Guys, stay tuned for the next one. Like I said, we're gonna be interviewing someone that has a specialty with subsidy tenants, so that should be interesting. And till the next one, guys, have a good one.